In this video, we are going to show you how to create SECR reports in GHGi Analytics. After logging in, you get to the central console. In the navigation bar, we select Reports, and in the drop-down select SECR Reports. This takes us to the SECR Reports page, which lists the SECR reports that have been previously created. We will look at how this is used in a moment, but first we will describe how one creates an SECR report and why. SECR is short for Streamlined Energy and Carbon Reporting. It is a requirement for all large companies and LLPs in the UK to include SECR in their annual accounts submitted to Companies House. The system takes the data input by users and converts it into carbon emissions using the appropriate annual government conversion factors. These emissions are then presented in the report format recommended in the SECR reporting guidelines. Start by clicking on the Add SECR Report button. This takes you to the SECR report form. You can create a new SECR report at any point and for any time period. This form is not only used to create the report to be inserted into the annual accounts, it can be used to create reports that compare different periods in a specific year or for different years once data is available for previous years. The first thing that you do is to add a report title. We shall type SECR Reports for 2018. Next, we select the From date, which opens up a date chooser. In this, we select 2018, then January 1st. In To Date, the date chooser opens, and again we select 2018, then December 31st. We next enter the Current Period heading. This allows you to set a shorter title over the results. In this case, we will enter 2018. This brings us to the Compare field. For your first report, you only have to submit the results for the first full financial year that commences from or after 4th April 2019. However, in subsequent financial years, you will be required to include energy and emissions figures for the previous year as well. This comparison allows your efforts to reduce emissions to be demonstrated. This drop-down enables you to select the report that you wish to compare against. Please note that in future years, the comparison report must be the one that was submitted to Companies House in the previous year. We will not select a comparison report in this case. This will leave the comparison year on the form blank. Next is the Intended Usage field. This enables the user to describe the reason for creating the report. By default, it states, figures and text to be included in annual accounts to be submitted to Companies House. However, you might be creating the form to provide management information, in which case you would use this field to describe the reason. I'm going to enter Trial SECR Report for 2018. Next, you have the option to add an additional reference. This is generally used for management reports and is not required for the formal SECR submission. We are going to add GEC 000143. The next is Contact, another optional field that is not required for the final SECR submission. However, if you are running the report for management reporting purposes, it is a useful contact point for queries. We will leave it blank. Organisational boundary is the next field. This is where you define the business operations on which you are going to report. To quote the government's guidance document, if you have a simple organisational structure and own 100% of the assets that you operate, it is straightforward. You would report the impacts from everything that you own and operate. However, for organisations with more complex structures in which some entities may be part-owned or owned but not operated, and vice versa, a different approach is needed that should be applied consistently throughout the organisation. So, if you have a fairly simple organisational structure, you would enter the company name. If you have any subsidiaries and you are including them, they should also be named. If the organisation has changed since the last SECR submission, describe the change and the impact it has had. For example, if a subsidiary has been sold off, you should state that it no longer forms part of the organisation because it has been sold, and its emissions are no longer included. Alternatively, if the organisation has any joint ventures, you may decide to exclude their energy usage and emissions from the report. If so, you must state this exclusion. The field in question is a multi-line text field that can be extended and reshaped. This allows you more visible room to describe the organisational boundary. We are going to enter ISP Limited and its subsidiary Goshawk Systems. We have excluded Goshawk Randall, our joint venture with Randall Solutions. The operational boundaries is where you describe the energy and emission sources that you are reporting. The default entry covers the sources required by SECR, and that is energy usage from gases, electricity and transport for all UK facilities, organisation-owned vehicles and grey fleet. Grey fleet is a term covering business travel in privately owned vehicles. This field can be altered to suit your circumstances. For example, your organisation may not use gas either for heating or production processes, in which case you would delete the reference. Alternatively, you may not have any company-owned or leased vehicles. Then you would delete organisational-owned vehicles from the text. For example, if you did not own any company-owned or leased vehicles, you would delete the words in the field. This would leave energy usage from gases, electricity for all UK facilities and grey fleet. Finally, we get to methodology. Each organisation must declare which methodology it is using to report emissions. The GHGi Protocol Corporate Standard is probably the most common methodology in use, and that is the default entry. There are other options, including ISO 14064, International Organization for Standardization, CDSB, Climate Disclosure Standards Board, GRI, SRG, the Global Reporting Initiative Sustainability Reporting Guidelines. So, you could decide to use a different methodology. If you do, replace the default entry with the one you're using. At this point, you press Create SECR Report. This saves your information and takes you to the page displaying the report you have just created. However, that is not the end of the process. The report is in a number of sections. The first section is split into 3 parts. It provides information for anyone who needs to understand the reason for and the basis of the SECR report. The first part is labelled General Information. It displays most of the information that you have just entered along with some additional fields. These are as follows: the person who created the report, the date the report was created, and the version, in this case 1.17. In future, we confidently expect that the requirements for calculating emissions will change. The version number, along with the created date, allows you to determine what factors and system procedures were in place when the report was created. This allows proper comparison of the results once the guidance changes. The second part is labelled Boundaries of the SECR report. It contains the current period header, the organisational boundary and the operational boundary. The third part details the methodology used, the calculation tool, in this case GHGi Analytics, GHG emissions factors, the government GHG conversion factors for the reporting company. Next we come to the emissions report itself. In the first section, the system automatically calculates the energy resulting from gases, natural gas, LPG, etc., electricity and transport, diesel and petrol, but also including grey fleet for the UK. The second section displays the emissions from each of these energy sources divided into gases used in stationary combustion, electricity, transport comprising organisation-owned or controlled vehicles, transport comprising rented or privately owned vehicles where the organisation is responsible for purchasing the fuel or electricity. Next to the UK column is one labelled Global. SECR does not require you to report or declare your overseas consumptions and emissions. However, we offer you the ability to manually enter your overseas energy consumption and emissions. Next comes the intensity ratio. An intensity ratio is a way of expressing your emissions data in relation to an appropriate business metric. It might be tonnes of CO2e per £1 million of revenue, or tonnes of CO2e per square metre of floor space. This allows you to compare your energy efficiency programme over time, both internally and with similar types of organisations. The system deliberately does not calculate this information for commercial reasons. Details of your company's annual report are sensitive, so figures for turnover are confidential prior to the publication and are only to be added to the form at the point of publishing the annual report. You will have to calculate the intensity ratio and manually enter it into the form. Next is methodology. This is a copy of what is displayed above. However, it also gives you the opportunity to expand upon your initial entry if there are any variations to the standard. The narrative report follows. This section is used to record the principal measures taken by the organisation in the financial year to improve your energy efficiency. Finally, there is a section for any other information that you consider important enough to be reported in your annual return. After this is completed, you click Save Report. This takes you to the list of SECR reports. The table itself is split into several columns from left to right. First is the account reference. Then Ref column, which provides a unique identifier that links to the report. Next, the title. We advise that this includes the year or period in question. Then CR by, the login name of the person who created the report. CR date, the date the report was created. Then the from and to dates. The period the report covers. This is followed by a series of columns under the title of GHG emissions in metric tonnes CO2e. The first column relates to the emissions from gases and the second to emissions from electricity. The next column shows the greenhouse gas emissions released from the organisation's vehicles. More accurately, they are the CO2 emissions that vehicles owned or controlled by the organisation emit. Typically, these are emissions from owned or leased cars, vans and lorries. This is followed by the emissions from grey fleet, emissions from business travel in privately owned vehicles. Finally, in this section, the total emissions in metric tonnes of CO2e. The last two columns relate to what is retained and which report is displayed on the dashboard. The first is labelled DEL. In some cases, particularly where the report has not been created for year-end purposes, you may only want to retain it for a short time. A blue X in this column means that you can delete the report by clicking on the X. There is no way to undo this and no warning asking if you really meant to delete the report. At this point, to help your understanding of the next section, I will explain the process you will probably follow to create the SECR report for publication. Once all the necessary invoices for the year in question have been loaded, you can create and save a draft SECR report for the full year. This draft report will give the information necessary to calculate intensity ratio and help in the completion of the narrative section of the report. Once you're ready to add the intensity ratio and the narrative report, you can create a new SECR report. After completing the form, you scroll to the bottom of the page and save the report. Once this version is finalised, you click on the ref number of that report, scroll to the bottom of the page where there is a button Disallow Deletion. When you click on this, the form can no longer be deleted or modified. you have your final SECR report for the year in question. This takes us to the final column of the report. It is headed SD. This stands for Set Dashboard. On the dashboard page, an SECR form is displayed. Typically, this is the latest published SECR form. You set the SECR form to be displayed on the dashboard using this column. Once a report has had disallowed deletion set, a blue S appears in the SD column. Clicking on the S will display it on the dashboard. To change it, simply click on a different S. If you look on the list of forms, you will see that currently GN00120 title SECR report for 2019-20 shows as bold. It has no X in the del column, showing that it can no longer be deleted, and it has no S in the SD column. This means that it is being displayed on the dashboard. As we can see. To change this, we click on Reports in the navigation bar and on SECR Reports in the drop-down. We will change to the entry above. To do this, we go to the end of the row and click on the S. You will see that this row is now in bold. The S has disappeared in the SD column, and an S has appeared in the SD column in the row below, the previously displayed SECR form. Going to the dashboard confirms this. Now, there is another issue that we need to consider, and that is the timing of the reports and the release of the UK government's emissions factors. In June of each year, the UK government releases the emissions conversion factors for that calendar year. If an organisation's financial year spans 2 calendar years, 2 different sets of emissions factors come into play. The general rule is for an SECR report to use the set of factors for the calendar year into which the majority of the financial year falls. So let's take the example of a company where the financial year runs from 1st April 2020 to 31st of March 2021. In this case, the majority of the financial year is in 2020. Therefore, the factors for the year 2020 are used. Alternatively, if we take a company where the financial year runs from 1st August 2020 to 31st July 2021, the majority of the financial year is in 2021. Therefore, the factors for the year 2021 are used. The timing of the release of the annual factors is rarely a problem, but in one circumstance it can become one. Sometimes there is a delay in the government publishing the emissions factors. They have been published as late as July, and on one occasion the government published a revised set in October. Really, this may only be a problem for companies with financial years running from 1st July to 30th June, and only if they report their year-end very rapidly, before the new factors are published. As I have already said, the system normally works out the calendar year into which the majority of the financial year falls, but this won't work here. In this case, the factors relating to the second half of the financial year will be used for the whole of the financial year. Please note that if you run a report before the latest factors are published, then the prior year's factors will be used. This would mean that the figures used in the preliminary report would not match the figures in the final report, which could cause confusion. That's all for this video. Thank you for watching.